Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking another look at gold. Gold's been a very interesting one recently. Let's take a look at the chart and we can talk through it. So I've got gold here quite zoomed out. These little candles that you can not see particularly clearly, but these little candles are 4-hour candles. And as you can see, since this double bottom that we set back in March, gold has been doing very well. A weakening dollar has been very helpful. Falling or at least staying very low US real yields has been very helpful. We'll talk more about that in a moment, I suppose. But first, let's talk about these key levels that we've been breaching to the upside. Can you see this blue line here? That is the 200-day moving average, and we made a clean break of that at the end of last week when we broke above 118.50, and now we're sort of consolidating at the start of this week in the 118.60s to 118.70s, just below this area of resistance that was set back. When was that? Yeah, those are the highs from late January and early February, around 118.75-ish. So that is the next area of resistance to the upside in the short term anyway. As well as breaking above the 200-day moving average, however, we've gone above what I think is another key level to keep an eye on. As you can see, this is the gold chart. This is the all-time high back here from August 2020. So we're quite zoomed out here. And you can see gold for many months was gradually descending within this descending trend channel. You can see we got the 3 touches on the bottom and the 2 touches on the top of the trend channel. But it looks like, as you can see, similar sort of time to when we broke above the 200-day moving average, we've also broken above out to the top of this trend channel as well. So that is quite bullish from a long-term technical perspective. So potentially, guys, I'd be thinking if we do see a bit of a pullback in the next couple of days, perhaps back towards this trend channel, back towards the 200 DMA, perhaps back towards this previous high from the month, that could be a time when the bulls reload on their longs and then target the next significant area of resistance, which is the November 2020 low, high, and the January 2021 high. They roughly coincide with each other around 119.50 to 60. That's the next sort of area that the bulls will be aiming for. But let's talk about the fundamentals. Why has gold been doing so well recently? What fundamentally has enabled it to break, or seemingly break out the top of this long-term downtrend? Well, as I said at the start of this video, the dollar has been weak and real yields have been low, but we have seen an acceleration of the upside in recent days as markets have been talking more about and becoming more concerned about inflation. Okay, remember last week we had CPI out of the US come in. It was a lot hotter than expected. We also had PPI, which was in line with expected, but very hot. I think the headline CPI was 4.2%, and then headline PPI was above 6% year-on-year rates of price growth. Some of that can be explained by weakness in prices this time last year because of the pandemic closures and prices essentially falling. But a lot of that can't be explained by those base effects. A lot of that is to do with price pressures right now. Now, obviously the government and the Fed are trying to say that it's due to supply shortages, which may fade, and also an increase in price pressures because of the extra demand as the US economy reopens. However, there's a growing fear amongst market participants that these price pressures are going to last for some time, and that the fear is because the US, the government and the Fed essentially have overcooked things with regards to stimulus. Obviously, US government's been not printing money, but handing out checks to every American. 2,000 this year. I think there was 800 last year as well. So 2,800 in the last year just given to every single American. And obviously the Fed has interest rates at zero, and they've been buying up $120 billion worth of assets every single month, which has been also suppressing interest rates and increasing the money supply. And the fear is that all this stimulus is going to lead to because the Fed calls it transitory inflation, and that's why they say we shouldn't worry about it, because it's transitory. But the fear in the market is that this inflation won't be transitory. And remember, guys, with gold is seen as a hedge against inflation. When the value of money drops, well, then you have to use more of it to buy the same amount of gold. You know, gold is a hard asset. It doesn't lose its value when you print more money. So this is why perhaps one of the reasons why there's been increased interest in gold recently. And as long as the Fed continues to stick with its line that it thinks the inflation is going to be transitory, and basically says we see inflation going up but we're not going to fight it, well, that is going to be very, very bullish for gold. If the Fed do start to panic about inflation, however, and then start indicating that there's going to be, they're going to be pulling back on the QE, they're going to be raising interest rates, well, then potentially markets might become more confident that, number one, inflation is going to come under control, and number two, interest rates are going to be higher, and that would be a bad combination for gold. But as long as the Fed doesn't do that and remains super dovish, man, gold could continue to go. So yeah, guys, hope you enjoyed the video this week, and I'll see you all in the next one.